What's up, everybody? Welcome to Gray Rabbit Finance. I'm your host, Tyler, and in today's lesson, we're going to learn about the Fibonacci numbers and why they are critical for us as traders to understand. I will also show you how to use Fibonacci retracements and extensions with the Ichimoku system. Let's hop in. Origins of the Fibonacci numbers. The year was 1202. One man was about to completely revolutionize the European mathematical system. The system, technically known as the Roman numeral system, had been around since 500 BC. This man's name was Leonardo da Pisa, also known by his nickname Fibonacci, or son of Bonacci. Fibonacci, born in the year 1170, was the son of a merchant named Guglielmo. During Fibonacci's childhood, his father, Guglielmo, was the leader of Pisan merchants in the North African port of Bujia, now Bajaya, Algeria. As Fibonacci grew old enough, his father sent him to study mathematics with his mentor, an Arab master mathematician. As a young man, Fibonacci would then go on to travel to Egypt, Syria, Greece, Sicily, and Provence, where he continued his studies of different numerical systems and methods of calculation. The system Fibonacci would learn was originally called modus indirum, also known as the Indian method. Shout out to all my subscribers and viewers from India. This system had originated from the Hindu-Arabic decimal system, which before had only been known to the traveling monks and scholars of the time. This system was invented between the 1st and 4th centuries, and was made popular by the Persian mathematician al-Khwarizmi. In the year 1202, Fibonacci would introduce this system to Europe after publishing his book titled Liber Abaci. Interestingly, Fibonacci's book posed a very important question pertaining to her favorite furry animal on this channel. This question was, how many pairs of rabbits can be produced in a single year from one pair if each pair gives birth to a new pair, each month starting with the second month? So using the rabbits as an example, calculating the Fibonacci numbers is as easy as 1 plus 1 equals 2, 1 plus 2 equals 3, 2 plus 3 equals 5, 3 plus 5 equals 8, and so on and so on. How many rabbits do you think were there at the end of the year? The number of rabbits grew astronomically following the Fibonacci sequence of numbers. The total number of rabbits at the end of the year was 233 rabbits. Copies of his book of calculations then multiplied like rabbits across Europe, and would go on to replace the old Roman numeral system by the 15th century. Fibonacci's work laid the foundation for our current mathematical system we still currently use today. Why are the Fibonacci numbers so important to traders? The Fibonacci sequence also applies to the financial markets. Since we as humans are a part of nature and are responsible for creating the financial markets, we can deduce that these financial markets are also a part of nature, as they represent an extension of human behavior, action, and psychology. Perhaps you may have heard of the Elliott wave principle. The Fibonacci sequence is the mathematical basis of this Elliott wave theory. After the first numbers in the sequence, 1, 1, 2, 3, 5, 8, 13, 21, 34, and to infinity, the ratio of any number to the next highest number is 0.618. This profound ratio is known as the golden ratio, and this ratio is found all throughout nature, biology, art, music, and architecture. Nature uses this golden ratio as a universal building block for all of its matter. For example, both DNA molecular structure and planets' distances from one another adhere to the golden ratio. The numbers of petals that grow on a flower is typically a Fibonacci number. The number of spirals on a sunflower is 34. These are just a few of the infinite examples found in nature. To simply explain this idea, the golden ratio is the basic proportional law of nature. It should be of no surprise to us as traders that the waves of the financial markets progress and regress based on the golden ratio and Fibonacci sequence of numbers. A long time ago, in a galaxy far, far away. Episode 1.618, A New Hope. Now that you have learned the origins of the legendary Fibonacci sequence, you are now ready to enter a new galaxy of trading. Learn you will the timeless Jedi techniques for using these sacred numbers. May the Force be with you. Now let us enter the charts. Okay guys, so we're going to start here on the Euro-US dollar on the daily chart. Now I'm going to show you how to use Fibonacci retracements and Fibonacci extensions with the Ichimoku system. So the first step is that we're going to look for the Senyoku Kyoten signals to look for the start of a new trend, right? Because just to put it simply, Fibonacci retracements and extensions do not work in ranging markets. So we're going to need a trending market to apply these effectively. And so for the Ichimoku system, we're going to look for the Senyoku Kyoten signals. So as you can see here, we have the gold cross, we have the Chico span above the candles, and now we have this first candle that has broken out of the Kumo cloud and past Senko span B, which is the thick white line here, right? And we're starting to see the bullish Kumo twist, right? And so now what we're going to do, step 2, is we're going to look for this impulsive wave. So we're going to look for the impulse wave up, and we're going to look for the first bearish candle on that impulsive wave. So let's play the bar replay. Okay, so we have our first bearish candle, right? So this is our first impulse wave, and we're expecting this to be an N wave up. So what we're going to do first is we're going to draw a Fibonacci retracement. And so we draw that by clicking here on point A at the wick, and then clicking up to the top wick here on the impulse wave. Now, as you guys can see, there's some different color zones here. And before we play any more price action, I want you to understand what these zones mean. So right here in this dark pink zone, we know that if price retraces into this level here, it's a very shallow retracement. And when we have a shallow retracement, that shows us that we have a very strong trend up, right? And so basically, the dark pink zone is a strong trend. This medium pink zone at the 0.5 level here on the Fibonacci retracement is a medium strength trend. And the 0.618 is just a weak trend, right? And anything that closes below the 0.618 Fibonacci retracement level is a sign of potential reversal in the market. So we're expecting one of these levels to hold the price action and get a bounce back up on the N wave, right? And so let's play the price action and see what happens. Okay. So you can see that the price was supported here at the 0.382 Fibonacci retracement level. So that means this is a very strong trend, and you can see that price just rocketed up, right? So we are going to use these retracement levels to basically, just to summarize, the retracement is just a way to know the strength of the trend. Now, some traders will actually buy at these levels, but like I mentioned before, I typically trade breakouts. So I would be looking to enter once price has closed back above this level here. But you know, this today is not really about entries or exits. This is just about using Fibonacci retracements and using them to predict the strength of the market. And now we're going to move on to Fibonacci extensions. Now, to summarize what Fibonacci extensions are just really to help us get a price target. And so I'm going to show you how to do that right now. And so we're going to do that by drawing a Fibonacci extension. So remember, we always draw from the lowest point of the impulse wave, which is at the bottom of the wick here at point A. Then we go up to point B at the top of this wick, and then we come back down to the bottom of this wick here at point C. Okay guys, now let me get the screen looking a little bit more scaled for you. Now I've done the same thing with the color scheme on this. Anything here in this dark orange zone, these are going to be the easiest to hit targets. So anything from the 0.618 0.786 and the 1-to-1 move or Fibonacci extension is going to be the most likely targets to hit, right? Now, in my previous videos, I've mentioned that the 1.272 Fibonacci level is a very common target for institutional traders, and so that's what I like to target. So that's one of my first targets that I'd like to hit. And so let's play the price action and just see how far this extends. But I'm expecting that, you know, we have a very strong trend, which means that we could actually reach all the way up to this 1.618 Fibonacci extension level. And guys, there's that number again. That's the golden ratio, right? And so you can see how all of this is related. And the Fibonacci, you know, if you're trading and you're not using Fibonacci retracements and extensions, you're really missing out on something that's essential, because these are timeless numbers. These are numbers found in everything, and you can really use these to your advantage to find out the overall conditions of the market and to find out where to take your profits at. So let's play the bars and see what happens. Okay, now we're getting a retracement. Okay. Okay, now we need to confirm this N wave. We need to have price break and close above this level here. Okay, and look guys, there you have it. Our price target was the 1.618 because, you know, we had the retracement here. I'm gonna put that back in real quick. So remember, we had the retracement. We saw that this was a very strong trend because price was supported here at the 0.382. And you can also notice too that we had confluence here with the Senko span B, right? So the Senko span B was flat here. And we've talked about this before, that, you know, we have to pay attention to the flat areas of the Senko span B because these are key price levels. And so it's not a surprise to me that price was supported here, right? And then we got the N waves continuing up. And since we said that this was a super strong trend here, right, then we reached the 1.618 level, right? So if it's a strong trend, we're more likely to hit the 1.618 and these upper Fibonacci extension levels. And if it's a weak trend, which would have been down at the 0.618, our targets would have been down here in these lower areas because those are the easier targets to hit. So this is just kind of a simple way that you can use Fibonacci retracements and extensions. You know, a lot of people, some people might enter a trade here at this 0.338 level here and then put their stop loss down here. But I don't really like to trade like that, because sometimes this market can just start ranging at these levels and then your trade becomes less time efficient. So I prefer to trade the breakouts. You know, everyone has their own style, but the main takeaway from this is that we can use Fibonacci retracements to measure the strength of the trend, to look for a possible support area for an N wave in a trending market. And then we can use Fibonacci extensions once we've entered the trade at this level, at this breakout level here. We can use the Fibonacci extensions to start looking for potential places to take profit. And it's really just that simple. So I'm going to show you one more example in the bearish direction. So let's go look at that. Okay guys, we're here on the Euro AUD, and now I'm going to show you an example. We're on the daily chart. I'm going to show you an example of how we shouldn't use Fibonacci retracements. And this is going to be good for you guys to know, because we're going to want to use Fibonacci retracements and extensions on N waves only. And if you guys haven't seen the Ichimoku wave theory, I have an introduction video that I'm going to put at the end of this, so you guys can check that out. But basically, I'm going to show you what a Y wave looks like. So we have all the Sanyoko Kyoten signals, right? We had the death cross Chico span below the candles, and we just broke down below the Senko span B, right? Now we're waiting for the Kumo structure to get thicker. So let's keep going with the price action. Okay, we're starting to get a retracement there. Okay. Now, okay, so we're getting our first N waves here. We have more steam in the cloud, so let's wait and see what happens. Okay, so I'm gonna draw on the retracement here. And now you can see that this 0.382 level is holding, right? So this is starting to look like it could be possibly a strong trend, but let's wait and see, right? Okay, so we got a candle down here, but this was a false breakout. So I'm going to draw on this trend line here, like that. Now let's see what price does. Okay, stop. This is what I want to show you guys. This is a Y wave. And typically these are very tricky ranging markets to be in. So I don't recommend messing around with these markets. And I'm going to tell you because this just shows that the market is very volatile. And when you have a Y wave, you're not able to use Fibonacci retracements effectively. So if this happens, if we think we're getting an end wave, but then we get a higher high, or we get a lower low and a higher high, that means we've just formed a Y wave. And this completely negates and cancels out any use of a Fibonacci retracement. Now let's play the price action more. And basically the reason that is just because, you know, the Fibonacci retracement is supposed to show you where price is going to get supported or resisted, right? And so we already had the price get resisted here at the 0.382, but then this price came back up and violated that. So we can't really use this anymore because it's just been canceled out basically. And you can see that we're still in this Y wave, right? So this is just a very tricky market to be in because look at all these false breakouts, all these gigantic wicks, a lot of volatility. Okay. So there you guys have it. That's a Y wave. I just wanted to show you that. Price did wind up eventually breaking back down. But you know, we didn't get price to break on an N wave down here. So this just turned into a ranging market and was very choppy. And so that's not what we're looking for. But let's continue this trend down and see what happens. Let's see if we can use Fibonacci extensions and retracements again. Okay, so we're trending down, okay? Okay, so I'm gonna take a retracement off of this level here. So let's delete that. Let's forget about our Y wave. Now it looks like we're trending down still. So let's take from this impulse wave down to here, and let's see where price retraces to. Okay. Okay, we're back to the 0.5. Okay, so now we have price close below this level. So I'm starting to think that we can confirm this N wave down. We have another N wave here, right? So you can see, guys, look how sloppy this is. And look at the structure of this, right? It looks like an N, but this is not looking like that at all. This is all sloppy in a Y wave. So let's take a look and see how the Fibonacci extension looks on this. So same thing, we're going to draw from here. Click point A, point B, and then up to point C. Now remember, we had a retracement to the 0.5 level here on the Fibonacci retracement. So that's a medium strength trend. So let's see how far we get. I'm expecting to at least get to 1-to-1 here. Okay, just knowing the strength of the trend from this retracement gave us a strong indication that price was going to reach the medium strength target, right? So this 1-to-1 is the medium strength. So if price would have been resisted at the 0.382, we could be looking for price targets in the 1.618 all the way to the 1.272, right? Because this is the strongest, this is the strong trend target zone. But since we had a medium trend, we were going to be looking from 1 to 1.272. And if we would have had a weak trend, we would have been looking at the 0.618 to 1 zones, right? So just kind of want you guys to understand that, like, these are just zones and just areas, right? It's up to us to use our intuition. It's up to us to use all the tools we have in our bag to do the best job possible trading. And Fibonacci retracements work. These levels, look, this was supported here at this level. And why is that, guys? It's because we are part of nature, and human actions, human emotions, human psychology is reflected in these charts. And that's why Fibonacci numbers work. And that's why you need to be using them. These are timeless numbers. They're found in everything. They're in your hand, they're in your ear, they're in the proportions of everything. And if you're not using Fibonacci numbers, you're really going to be missing out on having an edge in the markets. So guys, if there's one thing you can take away from the video today, is use Fibonacci numbers. If I could only have a few things to trade with, I would say you got to know how to read price action. You got to understand Ichimoku, because Ichimoku makes it so easy to interpret the market at one glance. I can open any chart and I can tell you what's happening in that chart after looking at it for 10 seconds. That's the power of Ichimoku. And now if you add Fibonacci to that, you're going to know when to enter, how strong the trend is, and where you should start taking your profits at. And that's going to help you guys become more profitable, and it's going to help you see one step ahead. Now guys, I trust you found today's content helpful. If you did, please like and subscribe, and thanks for supporting the channel. It really helps me and my family. Until next time, guys, peace.